Hello, I'm Richard Stevens. I'm the Research Director at IDC, and I'm also the Project Manager of the FI Impact Project. Today, I'd like to give you a little bit of an overview of what's going on with the SMEs, what kind of business models they have, what kind of business sectors they're working in, and in the end, I'd like to give you a little bit of idea of the economic impact this program can have. Let's start by looking at the number of proposals that have been presented to the FIPPP Phase 3. 16 accelerator projects have collected more than 8,433 proposals, of which 985 have thus far been funded. These are essentially small companies that are making proposals, and 69% of them have less than 5 team members. And 14% of them are just one-man companies. So they're very small companies. They reflect the demographics of companies across Europe. And they're young companies. These are mostly startups. 46% of them started their activities thanks to the FI-WARE funding mechanism. 22% had less than 1 year of experience. The proposals that have been submitted to the program are reflective of the European economy in general. When we started to look at this program, we expected that most of the projects would be business-to-consumer applications, but we were surprised to find that these were actually proposals for projects that were addressing real business needs. And in fact, over 60% of these were real business applications. And if we look at those that are both business to business and business to consumer, we find that over 80% of them fit in this model. And they're active across all of the vertical sectors that we see in the European economy. There is some focus on agriculture and healthcare and manufacturing. However, this is natural due to the fact that some of the accelerator projects that are funding these startups are focused on agriculture, healthcare, and manufacturing. If we look at the business to consumer market, we see the same general trend, and we see that the companies are active across all of the business sectors that we expect to find in Europe. We looked at these companies and tried to figure out what kind of economic impact they would have. So we developed a model based on the potential growth of these companies. And we divided the types of companies according to their sector that they were working in, and the typology of growth we could expect due to the fact that they had a certain size, were working in a certain sector, and would have a expected death rate. We came up with 7 different categories of companies that would be working in the European economy over the period to 2020. To these, we looked at the actual proposals, and we considered whether or not the demand that they were addressing was in line with the demand that we were seeing from the economy in general. Based on IDC data, we classified them as being closely matched with the demand, most likely matched with the demand, or not completely matched with the demand from the economy in general. To that, we also applied death rates. That means that the natural tendency for small and medium companies to to close their operations was based on expert opinion from a number of startup financing companies and public data from the OECD and Intrastat. We considered the types of markets that these companies were in, and the death rates were focused on an optimistic scenario where 54% of the companies would close their operations before 2020, a baseline scenario where 64% would close their operations, and a pessimistic scenario where 69% of the initiatives would close their operations before 2020. Given the types of markets that they were working in, the types of response to demand, and the types of growth rates for those particular sectors, we projected the incomes based on this data, and we came up with a baseline scenario where by 2020 these companies would generate more than 394 million euros of revenues before 2020 as a baseline scenario, and 474 million euros of direct revenues in an optimistic, while we considered a pessimistic scenario of 319 million euros. It's interesting to note that we started this analysis in 2014. We looked at the data again at the end of 2015, and looking at it again in the summer of 2016, we recognized that the data confirms that we are exactly in line with the baseline scenario at this point. So we're very confident that these companies will generate direct revenues of 394 million euros before 2020. This is not considering indirect revenues or induced revenues, which are presented in another video later. Globally then, what we do see is that this program has been very good at attracting SMEs. There are 985 companies already set up and running thanks to the initiative, and that's actually, comparatively speaking, much better than almost all of the other programs in Europe that are geared towards SMEs. And that by 2020, 325 of these companies will still be active and generating revenue, and they will be essentially micro-enterprises. This data shows also that these companies are creating employment. More than 30% of these are born with FI-WARE, and this is their first job. And these companies, as they grow, are hiring people. So that we've found of these 985 companies, they are already creating about 0.6 jobs per startup. We find that these companies are not niche players. They're actually well distributed across the vertical sectors that make up Europe. And that the FI-WARE investment, therefore, is reflecting the European economy in general. If we consider the return on investment, we note that phase 3 of the FIPPP contemplated an 80 million euro investment for the European Commission, and if the yearly generated revenues are taken into consideration by 2020, 374 million euro baseline scenario generated revenues is an excellent return on investment for Europe. So the program can be considered very successful. If you'd like more information, more detail about any of this data, just come visit us at our website, which is fiimpact.eu. Thank you very much.